Hello, 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 and a massive hello to everybody. Hope we're all having a great day, a great weekend. This is 50 Pips, rocking and rolling, 28th of February 2016. No trade calls or recommendations or response for their own stuff. And the fact that you're listening to this means you're ready to understand to accept all the disclosures, disclaimers on the blog, understanding that we're just doing this for learning purposes, right? Just the educational materials. So, guys, keep in mind that tomorrow is the last day of the month, so leap year. So, we've got an extra day in February 29th. And again, tomorrow's going to be fairly light on the data calendar. Things are going to start to get a little bit more interesting on Tuesday because we've got the China PMIs coming out, all the other PMIs. So that's really going to be the fresh start of interesting data. Then we got GDPs out of Australia. We've got ADP. We got, we'll still have more crude oil inventory data coming out, unemployment claims, and then we're going to end the week, especially with that, non-farm. So that's going to be fairly interesting. So again, going into the week, the focus is going to be, how are we going to react on the open on any possible G20 news, right? But apart from that, it's really continuation of last week, right? I think one of the most interesting charts to really sum it up is if you look at the ES monthly, right? Now, keep in mind that we still have one day to go, so stranger things have happened. This could end up closing, negative, even worse. Anything can happen. So don't want to have any fixed ideas. But it looks like it's going. There's a good chance it's going to close at the very least with a decent wick to the downside, right? So usually when you get to see this kind of action, you usually get some kind of follow through to the upside. So again, what we've been talking about, the fact that the market has been unable to attract new sellers at lows, as indicated by the wicks, keeps on materializing. So, you have to respect the support. On the other side, we've seen the dollar catching a bid. And if you look at the euro chart, right, you've got the wick in the opposite direction. Like what we've been talking about since the last time Draghi was on deck on the dance floor speaking, as we said, we'd expect this to continue to trade very, very heavy until the next ECB meeting. If memory serves, it's on the 10th. But again, we were so, as far as we're concerned, euro was just to sell rallies, and especially with the fact, as we talked in the past updates, where equities in the ES were catching a bid, we definitely expected this to get sold heavy and stay heavy. So, nothing new there, right? So in terms of euro, we've come back down, and as we said, we expect it to be back somewhere in the mid-range, closer to the 09, 08 area into the ECB meeting, but with a lot of pressure on. So it looks like we're continuing to come back down. It's broken back below that previous resistance that should have acted as support. It's breaking below this trend line, even though we're not huge fan of diagonal support or resistance lines. We prefer horizontal lines. But right here, keep an eye at this level. As long as we hold below, then we'd expect it to come back to this whole area where we had all this previous support, and to stabilize somewhere here in this mid-range around the 08, 07, 08. Anyway, waiting for the ECB. And again, a lot will also depend on what happens on the equity side, but we'd expect this to stay fairly heavy, right? Any rallies, keep in mind that this previous resistance support zone, that's going to be the focus around 1060s, right? So no big change there. In terms of the ES, right, we've been talking a lot about the fact that the 1900 was the pivotal area, and we had three big areas we're focused on: low range, mid range, high range, right? So we're looking at 2000, 1950, 1900, and we talked about the fact going into the week, the chart that was on the blog, is that 1950, we're holding a bid tone. We expected it to get back to 1950, and that was going to be the pivotal level, either for moves back down into the 1900 or that rotation back up into the 2000, which would give us the completion of this double bottom, which we ultimately expect to make it back into these two moving averages back around that level. So far so good. We'll have to see how we behave this week. I think, all eyes, similar as we discussed last time, are going to be about around these 1950s. I think unless we get a daily close above the 2000, or unless we get a daily close below the 1900, we'd expect to see a lot of choppy area, market looking for directions, waiting for the next data points, probably waiting for ECB, waiting for the Fed, but, a lot of two-sided and whippy action here. But again, keep in mind, nice little base, rotation higher. Keep in mind what's happening on that monthly. Would not be surprised to see some more follow through to the upside. So our base stance is if we fail, even if we fail hard, we probably have to fail from a higher level. So let's see what happens there. Euro JPY, a lot of people asking me about it. You know, so far on trend, broke down the big support, came back, bounced at the bottom of this channel. Very nice little close here for play back into those highs. This previous support is going to be key. You know, as long as it holds back below these 126s, expect this to trade heavy. If it can get back above the 126, then we'd expect a little bounce. But this is going to be the key zone, but still holding heavy here. USD JPY, we said to us this was a fairly clear long play. We expect this to try and make its way back into the 115 mark, and it's in play, right? I think the level of interest is 115. Daily closes above bullish, daily closes below, sideways to lower chop. But again, keep an eye that there's no reason why we couldn't rip all the way back up to the 118 if we get a good daily close about the 115. I would still respect this as long as we close here, expect it to try and retrace lower. But this is really a key zone going into the week. I think we had a decent read of this. Gold, again, we expect all these failures to hold at highs, right? We talked about the first failure here, press above the 1250 and failure to hold above. And as we said, similar to our outlook, our discussion on bonds, right, on the CBs, is as long as this doesn't get taken out, we expect the path of least resistance to be a slow move back towards the 1200. Range is 1250, 1200, 1150. And so far, it's choppy, but it's playing out quite nicely, right? If you look back at a 4-hour, right, you had this initial failure here, so weakness, we come back into it, negative close, and it's still holding heavy. So a lot of chop here, but it's all about that extreme. That's why to a certain extent it can be a bit tricky because the ranges are so wide. But again, as long as these highs don't get taken out, especially from a day close perspective, we'd expect the 12, put it this way, we expect 1200 to print before 1300 to print, okay? And even if it's just a downside rotation for then a move higher, we think here it looks like it's going to retrace a little bit. What else have we got? I mean, in terms of a lot of people asking me about Aussie and Kiwi, we kept on saying we don't think there's an awful lot of edge. These are very choppy. We expect these mid ranges to attract, even though there was looked like it was very bullish. There's a lot of pressure here, so they're really not both pairs. We don't think there's an awful lot of edge here unless you're trying to scalp them intraday. It looks like it keeps on being attracted. This mid-range keeps on being a pivotal zone, and as far as we're concerned, it's too choppy in terms of trying to call the next big swing move only intraday plays. I don't think there's an awful lot of edge. And the same thing on Kiwi, right? We talked about the fact that it just looks like there's some serious sell pressure here. I mean, again, this is a high beta currency, very low liquidity currency, so it's fairly easy to move. So I don't know if it's the RBNZ, sorry, or what, but it just looks like it keeps on getting sold here. So I really have no interest trying to fight flows here, trying to get longs here and get stuck. It is just a big choppy area stuck in here. No interest at all to do anything on this pair. What else have we got? Yeah, Dow Jones, you know, it's moving up to where same as the ES. We're looking for this to try and grind higher back into those two moving averages. We looked at CAD. This is in play, right? We had this. We talked about this swing short, and we're looking for move back in a primary target back into that 100. You know, all that move down, giving us a 1 to 3 risk reward. And right here, this is the core level. So I think the quick pips or the core part of the move off that 140 on that retest into the 50 for the move back into previous resistance acting as support, that's the quick move down. Now we have to see if we can move an extension next week and get the third target, but you do have to respect this resistance. If it's going to bounce, you'd expect it to bounce here. If it can't, then we'd expect this to get tagged fairly quickly. 135, key pivotal for daily closes below the 200, above the 50 DMA. Fairly nice chart. Cable is still holding fairly heavy here, right? So it's all about action at these lows. We're trying to base at the lower end of the channel. We've talked a lot about this. I think, most of the, a lot of people calling with Brexit, around the 130, 135, no Brexit, 155, 160. I think it's very choppy. I think as long as we hover here, it's clear that the pressure is on, and that in low liquidity chop, the path of least resistance is probably going to be to try and take out stops to the downside and cause some more pain. I just think here the pot odds are really in favor of trying to play the upside if you have to do anything, right? So I'd say sidelined or look for pops, maybe even a gap fill. But I don't think there's an awful lot of edge to try and get aggressively short here. So if it bounces here, I'd look at these 38.50s or 38.00 as the level to look going into the week, right? And as long as market can base a little bit here, hold a little bit of a bid tone in this area, then I would expect to see a little bounce maybe on the datas too, right? But if it holds below, then, probably it's going to be a self-fulfilling prophecy, and those 135s are going to be calling. Again, most people talking about that. The majority of the move will probably be done before the referendum. I tend to agree. So let's see what happens, but clearly I don't think there's an awful lot of edge to try and get short here. If you desperately want to get short, any sharp corrective rally could be interesting, but right here at lows, not too interesting. USD CHF, again, nice chart. We actually looked at this initial hold of the 200. We kept on saying failure to close below the 200 is a nice long for a move back into the two moving averages, the 50 and the 100, and that was the quick move, done and dusted. Now here, all about this dollar, all about equities. Keep in mind what happens here. We start closing above this 50, then I think the dollar's got more room to run, and I'd be expecting it to come back into this descending trend line here. If we start trading heavy, then look at the downside to attract, but I'd still expect to see some kind of underlying bid tone. I'd expect to see the SMB on the wire, so I still think the path of least resistance is to still attempt a little bit of the upside, similar to our discussion on the ES, right? In terms of crude, again, nice moves on crude. We discussed the fact that we looked at this as trying to put in a base to rotate back into that 35, 37. We discussed that we would respect this resistance, and we felt that anything into here was interesting to flatten up and then wait for that data to come out this week for a move back into this support to get long for another retest higher. Here I'd be flat on all longs because it just looks like the market is uncomfortable attracting new buyers here, and there's a lot of sell interest. So I still think the interesting zones are shorts higher up, longs further down. Right here, I think it's a lot of velocity inside range. I wouldn't be particularly interested in engaging or in doing anything there, okay? So I hope that was useful, guys. As always, thank you so much for the follows. Thank you for the retweets. Thank you for the banter. Thank you for the likes and everything. So have an awesome one. We'll see you around on Twitter. Have a great week, and let's see how it shapes up. Take care, guys. Bye-bye.